Today, we're going to break down one of the most incredible trading stories you'll ever hear. We're talking about a trader who turned $30,000 into $10 million. But listen, this isn't just about the money. It's a story about starting from absolute rock bottom and learning to master the market the hard way.
So let's just start with the final number, $10 million. It's a stunning figure, but honestly, that number isn't even the most interesting part of the story. The really fascinating part is how it happened, and the lessons he was forced to learn on that journey from 30K to the top.
And right here, this is where the story just goes into hyperdrive. In his own words, he took his account from 30,000 to 3.5 million in just 16 months. I mean, that kind of growth is almost unheard of, and it was only possible because of a very, very specific moment in market history.
All right, so to really get this journey, we have to go all the way back to the beginning. Because this story, it doesn't start on a Wall Street trading floor or in some fancy finance class. No, it starts in a place most people would consider the absolute bottom.
And when I say unlikely, I mean just look at this timeline. It's wild. April 1st, 2020, Ariel Hernandez is released from prison. He has zero trading knowledge. 2 weeks later, he sees some friends making money on Robinhood and gets inspired. By June 1st, just 2 months after his release, he's a full-time trader.
Now, you might be wondering, where did he get the money? Well, he didn't have a pile of cash waiting for him. He had to build his starting capital completely from scratch, which meant making a huge commitment that proved he was all in right from day one. And that commitment was very real. He sold his motorbike, he sold a watch, and pretty much anything else he could get his hands on. The main goal was to scrape together enough cash to get over that $25,000 pattern day trader threshold. You know, that's the minimum you need to day trade as much as you want. He was literally betting everything he had.
Okay, so his account is funded, he's ready to go. And then, the second key ingredient comes into play, timing. Ariel's timing was, you could say, absolutely perfect. He jumped into the market just as the post-COVID boom was creating one of the wildest, most rewarding environments for aggressive day traders in, well, maybe ever.
His incredible rise was basically fueled by one key strategy, something called sympathy plays. The logic is actually pretty simple. You see a lead stock in a sector, think GameStop, go absolutely nuclear. So traders scramble to find the next one, and they start buying up cheaper related stocks like AMC to ride that same wave of momentum. Here's a perfect example of how it worked. There was a solar stock, SPI, that went from $1 to $46 in a single day. Crazy, right? Ariel missed that main move, but he immediately started looking for other cheap solar stocks and found one called SunW. It went from 90 cents to $4 that same day. He was trading the echo, not the initial scream.
His mantra during this period was simple: buy red, see green. And it worked. Back in 2020 and 2021, almost every single dip was getting bought up aggressively. So the strategy was to buy into that weakness, that red candle, knowing the market was so strong it would probably bounce right back, letting you sell for a quick profit, see green.
And just how well was that strategy working? Well, at his peak, the sums were just astronomical. Get this, he cleared $800,000 in a single month. For a while there, the strategy was absolutely flawless.
But you know how these stories go. What goes up must eventually face a new reality. And then 2022 happened. The music just stopped. The very market that had rewarded every single aggressive move suddenly started to punish them. This was the moment of truth.
And just like that, the rules of the game changed completely. Buy red, see green suddenly became buy red, see a lot more red. All those aggressive tactics that built his fortune were now draining his account. The market wasn't pulling him in anymore. It was actively trying to push him out. This all led to a huge realization for him. The market had basically taught him a series of really bad habits. He understood that his strategy only worked in one very specific, very crazy environment. It wasn't built to last in all markets. He knew he had to adapt or he was going to lose everything. So this challenge forced a complete evolution, a total rebirth. He stepped back from that frantic minute-to-minute pace of day trading and started to rebuild his entire approach from the ground up, focusing on a more patient, more strategic style. The change was, well, it was dramatic, night and day. He went from making hundreds of frantic trades a day, focusing on minutes, to just a few patient trades held for weeks or even months. The stress level plummeted, and his prep work shifted from reacting in the moment to calmly planning everything out the night before. To make this huge shift, he basically went back to school. He became a real student of the game. He just dove into the work of trading legends. People like Peter Brandt, Mark Minervini, guys who have survived in the markets for decades, not just for one crazy bull run. He absorbed everything he could about what it really takes to last.
His new philosophy, after all that studying, was actually simple but really profound. He decided to stop chasing the most volatile, low-quality junk stocks. Instead, he would focus on identifying the true market leaders, the stocks that hold up the best during corrections and show the most strength.
So, after all that, the incredible highs, the humbling lows, what did this entire journey actually teach him? Well, it all boils down to a few core principles for playing the long game.
First off, his story is a huge warning against some of the worst advice you'll ever hear. This idea that trading is a get-rich-quick scheme, it's a total trap. And believing that one single strategy will work forever, as he learned the hard way, is probably the fastest way to go broke. So if that's the bad advice, what's the good advice? What's the hard-won wisdom? Well, it's that true success is about longevity, thinking in decades, not days. It requires you to never, ever stop learning, to manage your risk obsessively, to take care of your health, and maybe, most importantly, to let the market pull you in. Don't force trades when they aren't there.
And this all leads to what might be the most powerful lesson of all. Ariel's story is proof that the market doesn't care about your background. It is a pure meritocracy. The only thing that pays you is your process, your discipline, and your absolute willingness to adapt and learn.
So I'll leave you with this question. The journey from $30,000 to $10 million wasn't really about finding some magic formula. It was about evolving from a gambler who got incredibly lucky in a hot market to a professional who could adapt and survive in any market. And that adaptation, right there, is the real secret.